Have you ever wondered whether it's smarter to pay off your mortgage early or invest extra cash? Well, you're not alone, and in today's video, I'm going to break down the math and help you decide what's best for your financial future. But before we get started, my name is Chris Lamb. I'm a 23-year mortgage lender in California, and my purpose is to help the middle class achieve financial freedom. Before I get started, I would ask you to please subscribe, like, or download. You can also leave a comment. So I'm going to break down the math and help you decide what's best. A lot of people right now are drowning in their mortgage payment, while there's some who've got some extra disposable income. And really, we're going to be targeting those people. I have them call me all the time, literally for 20 years, and ask me the question, what would it look like if I paid extra on my mortgage? And I'm always going to tell them, well, that depends. The first thing I'm going to say, though, is congratulations if you're fortunate enough to ask that question. With the average American savings rate hovering around 3.6%, the fact that you're even considering this means that you're ahead of most people today. So the first thing we're going to do is look at how mortgages are structured and the impact of your interest rate and what it means for your decision if you pay it down. Plus, I'll provide actionable strategies to pay off your mortgage early if you're leaning that way and it's right for you. When you take out your mortgage, you're borrowing a large sum of money to buy a home, which you then pay back over a specified time with interest. For example, if you have a $400,000 loan with a 30-year fixed rate mortgage at 7%, your monthly payment would be around $2,660. Here's how it breaks down. You've got principal. This is the amount you actually borrowed. Then you have interest. This is the cost of borrowing that money. And then the first month, your $2,660 payment will break down as follows. About $2,333 goes towards interest, and only $327 goes towards principal. This means early in your mortgage term, most of your payment is going towards interest, and most people see that and it shocks them. But this is how mortgage companies make their money. In the first 20 years of the 30-year mortgage, you'll still owe about $229,200, having only paid off 42.75% of the principal. The cost of the interest over the life of a 30-year fixed loan, specifically the one we're talking about at 7% interest, you'll end up paying $558,500 in interest on top of your $400,000 loan. This comes in at a whopping $958,500. In contrast, a lower rate like 3% would result in $273,000 in interest over the same term. So paying down your principal faster can significantly reduce the total interest you pay and the investment versus paying off your mortgage. This means early in your mortgage term, most of your payment is going towards interest. And it's a shocker. In the first 20 years of a 30-year mortgage, you're going to still owe $229,200, having only paid off about 42.75% of the principal. Over the life of this 30-year loan at 7% interest, you'll end up paying $558,500 in interest on top of the original loan of $400,000 for a total amount, wait for it, of $958,500. In contrast, a lower rate like a 3% would result in $273,000 in interest over the same term. So paying down your principal faster can significantly reduce the total interest you pay. Now let's talk about investing versus paying off your mortgage. So paying down your principal faster can significantly reduce the total interest you pay. Now let's compare this to investing in the S&P 500. The S&P 500 has historically averaged around 10% annual returns. After accounting for taxes, you might expect about a 7 to 8% return. If your mortgage rate is lower than this, investing could yield you a better return. For example, with a 3% mortgage rate, investing extra funds might be more beneficial than paying off your mortgage early. Strategies to pay off your mortgage early. If you still prefer to pay off your mortgage early, here are the 3 effective strategies I've seen people use. Number 1 is a bi-weekly mortgage payment. This is where you split your monthly mortgage payment in half and pay half in the beginning of the month, half at the second part of the month. If you still prefer to pay off your mortgage early, there's 3 effective strategies I've seen my clients use. The first one I want to talk about is the bi-weekly mortgage payment. Now, it is not a myth, it totally works. So you're basically going to split your monthly payment in half. and pay that around every 2 weeks. This results in one extra payment each year, helping you pay off the mortgage faster. Let's give you an example. If you have a $400,000 mortgage, again at 7%, this could reduce your mortgage term by 6 years and save over $134,000 in interest. The other thing you can do is pay extra monthly payments. Now I know that sounds like a no-brainer, but if you add an extra $200 on top of your mortgage payment every month, this simple adjustment could save about 6 years in payments and about $126,000 in interest over time. Now the third one would be a lump sum payment. And that's not something everyone can do, but if you have some sort of a windfall, such as a tax refund, a bonus, you sell a business, or you get an inheritance, and you were to put that towards the mortgage principal, that can make a big difference as well. For example, if you made a one-time payment of $12,500, that could reduce your mortgage term by almost 3 years and save you about $79,000 in interest. So whether you're deciding between paying off your mortgage early or investing, it's essential to weigh the benefits and consider your financial goals. If you have a lower mortgage interest rate and a long time horizon, investing might be more advantageous. However, paying off your mortgage early offers the peace of mind of being debt-free and can be a solid financial move if it's right for your situation. What do you think? So whether you're deciding between paying off your mortgage early or investing, it's essential that you consider the benefits versus the cons and your long-term financial goals. If you have a lower interest rate on your mortgage and a long time horizon, investing might be more advantageous. However, paying off your mortgage early offers the peace of mind of being debt-free and can be a solid financial move if it fits your situation. I would love to hear what you think about this. Are you leaning towards paying off your mortgage early or investing? Drop your thoughts and comments below, and don't forget to subscribe to the channel for more practical financial insights. Check out this video on how to budget for your next home purchase if you want to dive deeper into real estate. Thanks for watching, and I'll see you in the next video. I'd love to know what you think. Are you thinking paying off your home early is a better fit or investing? Drop your thoughts and comments below. I would love to see them, and I do reply to all of them. And once again, please make sure to like, subscribe, or download this so I can get more videos out to people. I look forward to seeing you on the next video.